Hello, peeps. Anybody there? Only me. So PCE has come out quite benignly, as expected. We talked through the average being spot 3% according to consensus. That's actually come in at spot 0.8% move. So not only spot 0.3 away from being a zero print, but in itself, it's a good print because the previous month was revised up to spot 3 from spot 2. So the fact it's dropped back spot 2 is a net win, really. And it's moving in the right direction. That durable goods data from yesterday, excuse me, which missed, that obviously fed through to the personal consumption expenditures. We'll look at that in a minute. Where is my... So that is from the Bureau of Economic Analysis, BEA. And if you go into the release, you get the option of looking at the release or the tables, whatever. This is a table for PCE. As you can see, so when you work out how much it's moved, you're looking for the core figures. So that is PCE less food and energy, 122.045 divided by 121.944. That gives you the spot 0.8 for the month. So that's a reasonable print. Is it a case of it's more the fact that it's not negative? As I said, a lot of the factors that feed it are already known once you get PPI and CPI. So it's just a case of whether things around the edges were slightly weaker, and it looks like they were. Hopefully we can have a look at that later. But, net, that is what the Fed wants to look at, but every talking head out there is saying, watch the data. Well, they keep watching the data slowly deteriorate, and they don't want to do anything. Not quite sure why. Barkin came out today as well, didn't he? He was talking about there's only one way of finding out whether their R-star natural rate is the correct one, and that is watching and waiting and seeing what happens. I mean, brilliant. If anything, he was suggesting they might not be tight enough. So if your natural rate is higher, then you'd need to put overall rates higher, is their idea. I'm surprised the market didn't sell off a little bit on that, because that was quite negative. That's a couple of them. And in fact, Cook during the week, she said, didn't see any. Let's check it. It was Cook, I think. It's either Cook or Bowman. Said that they didn't see any rate cuts this year. And in fact, they were pushing back into outer years, which means 25, 26. What you need to keep in mind now is that analysts and strategists, etc., start looking 6 months ahead. Generally, everything should get discounted 6 months ahead. So a lot of the focus will shift now onto 2025 and beyond for when rate cuts and etc. go through the models. At the moment, whatever they do, unless they're dragged into it by a mistake, is not going to make a lot of difference. Obviously, there's a lot of chatter about the political side of things after last night. Apparently, nothing really happens until after the next bank holiday in the US. It's when they really crank up all their political agenda. So last night was a bit of a shock, being taken well by the market. It's quite strange, isn't it, really? Everyone is quite anti-Trump. Question from Melina: what happened with the gold? Well, I mean, there's no negative in the way you're going to have that knee-jerk move. Now it's just a case of the flows taking over on the final day of the month. I mean, when we look at it, it's potentially in a connector before we do another 3 legs down for that A setup. It's all a bit noisy and annoying at the moment. I'd just like to, like I say, get that cathartic puke out of the way so we can start looking at it in terms of the next proper leg up. But as some people have mentioned, we are going into summer. Seasonality doesn't really work for gold a lot of the time in the summer. But what I'm trying to get across to you on a daily basis is this is a new paradigm for gold. Since January the 1st last year, 2023, the rules changed. So you're now dealing with we're into 18 months of the new world. And as you can tell from the charts, that is basically bullish and is one where you need to find physical demand. So we need to think of it in a slightly different way now. It's like creates a kind of log normal situation where it will necessarily go up because there'll be an underpinning of where the central bank demand is. What we're going to look at today. Hi, Pav. Good afternoon. Who else we got? Julie. Hello. Yeah, no, you can stop that drink driving, Julie. Yeah. Just sit there with your afternoon cocktail. You'll be fine. So yeah, PCE data, which I just quickly ran over at the start. I don't know if many people were there. Spot 0.8%. That is below the consensus of spot 1, and the average was actually higher than that, as I showed this morning, spot 1.3. So that was a decent move down. I haven't had a chance to look through individual components. There'll be something probably on the health side or the financial commissions no longer growing that will have caused that to happen, because we've seen most of the data from CPI and PPI. Japan, and we'll look at the UJ in a bit. Obviously, Tokyo inflation this morning, and that sort of ticked a box. 2.1% versus 2% expected, 1.9 last month. So just answering a question on the chat there. So yeah, the idea for Japan is to try and get to 2% embedded inflation, and then hopefully they can start doing something. But it's a little bit like the confusion that we've got in the Western world here. It's taken 15 years to get inflation back into the system, and why you're trying to squeeze the hell out of it. Deflation took such a long time. We had all that QE. Equally, you've got the early stages of a breakout and inflation coming in Japan, and the biggest worry is the having to do this intervention or trying to get the market to believe that interest rates are on a more solid path. Now, when I did the numbers a couple of months back, putting up rates by 1%, I think would, because they've got a huge debt, national debt, it would cost about $100 billion. Now, they've already intervened in a 2-3 month period for about $100 trillion. It's kind of wasted money. Why don't you start signaling properly and actually put themselves on a rate bound, a path moving up? But I don't think they're going to do that. They're against doing that. They're in for doing a lot of talking. You may see them play around the edges today if the dollar continues to be in a weak pattern. Still, to me, looks like we've got one more leg up, and we'll have a look at that. But at the moment, it's quite soft, and that's supporting gold and the indices. Very much end of month flows probably. So that puts UJ in a bit of an issue, because the rest of the data isn't necessarily going banzai yet. That there is talk that a lot of the wage increases haven't come through yet. The settlement for the year is big, but most of it's not delivered until this sort of July-September period, I think. So that might pick up things. Retail sales on the edge are probably okay over there. But as I said earlier in the week, there's some Japanese big investment firms saying they don't think the intervention will work, and they're discouraging it. They think that they'll hold off as long as possible. So I said that, and they think that brings in 170. Fabo on our chat, he's seen a couple of things from Goldman's and Bank of America. They're both talking 165, 167 kind of area. And again, we'll show on that chart. We talked about it on Monday. We'd put in the breakout. We looked like we were putting in 5 waves to get a small pullback, and then it'll go again. Be a bit of flip flopping either side of 160 probably, and then we get a proper surge as they realise they're not going to do much. Their next meeting, their July meeting, is going to be all the details about stopping buying bonds, and it's taken them too long to get that sorted out. So whether they're brave enough to move rates, the market will definitely push it going into that meeting and then see what they say. GBP data, what do we have there today? We had GDP, didn't we? Which came in more or less in line. Slight uptick on the quarter and year on year, just a 0.1 above. But again, business investment, that was down more than expected and contracting on the quarterly basis. Housing, current account got worse. That's exports minus imports. So either exports are slowing or imports growing, or a bit of both. So as we said, since the last meeting, the data has not really improved in the UK. Any kind of excuse they get, any breathing space on wages and inflation, they will definitely cut, because unlike the US, they're not coming from a good starting point. They're coming off what was almost a technical recession. So they will need to catch up and keep this thing going. So look out for sterling weakness after we've had any kind of dollar infused strength. Outside that, it's sort of as you can see here, and I sent a thing out last night, which is all about how to start your fundamental journey. And a lot of people ask about this, and I've written it a few times. I thought we'd make it just a small Word document, 3 pages, just giving a few hints of where to look for things and what to look at. And as I'm showing there, fundamentals. I'm not sure. I think maybe the link through YouTube, Pav. It's cool. Where was I? The key to it, as I always said, is looking at it in terms of an A-level sort of economics. Aggregate demand and aggregate supply are the real areas that you should look at. And looking at data which mainly focuses on the aggregate demand side. That's the consumer plus investment plus government, then plus your trade balance, exports minus imports. And we're forever getting bits of data to look at, so you can gradually piece it all together. And as far as I can see, I'm just taking an overview to create the kind of interest rate bias, is that the consumer is really slowing, and that's 70% of the economy. So they do need to keep an eye on this. Durable goods, ex-air, non-defense. The Michael Jordan, we had an update on that, him getting his slam dunk blocked on today's picture. That is slowing. That's the biggest and best used proxy in the States for business investment for the eye. And do we think it can grow? Now, obviously, this is where all the politics sort of comes into the fore. Both of them have got issues with the national debt and balancing the books. And Trump, particularly, is going to be quite fast and loose, going for this growth idea, the whole what gets accused of being Trussonomics these days. And they've got these 16 Nobel Prize winning laureates that have written a letter, and they're all totally against what he's going to do and say it's going to be super inflationary. Blah, blah, blah. Some people who come out the other side of that and say, look at the track record of the blokes who wrote that letter, and none of them were particularly good in 2008 and not really at the start of the supply chain argument. So take it with a pinch of salt, but they've certainly got a lot of media attention. It's been talked about all week. To a certain extent, the US can't really stop, can they? We're all fully aware of the de-dollarization, but they're so deep now that they've got to keep going, keep trying to grow it out. In fact, we don't want them doing anything that suggests deflation either. I think the only real way out they've ever got is going to have to be this. Um, they have to take it on the chin, but this whole alternative currency idea and revaluing gold will give them a chance to offset some of the accounts. But in that basis, and the fundamentals thing I sent, obviously you've got Keynesian policy versus, which is mainly fiscal policy, how you create your money and taxes and what you actually spend, and how that affects the various parts of your economy versus monetary policy, their Friedman ideas and the interest rates. So have a read through that. So at the moment, to me, in the US, they're getting very much towards the end of what they can do on the fiscal side. And as I mentioned in the piece, quite a lot of the countries around the world are in a similar position, and they really need to be reining in the fiscal side if they can. But with them all having elections, nobody normally gets voted in saying that they're going to reduce spending. So you don't tend to see that happen. But that will probably be a theme in 2025, which may in itself see a bond rally, lower yields, and that will be a support backdrop for indices, and may well see once the dollar's sold off, then that might be the thing that really helps it dig in. But we've got a lot of ups and downs to get through before we get there. But in the short term, that leaves the US and the Fed really with only interest rates to try and use as a defense mechanism. At some point, they're going to have to come in. The deeper and longer they leave it, all this data dependency, then if you are, I think Mohammed El Arian was talking about this on Bloomberg. If you just look at it, the chances of the reigniting supply scare globally or Fed interest rate cuts creating a reflation is quite slim. That's got to be the sort of outsider, and somewhere between soft landing and no landing is probably 30 to 40%, and then the way they're going at the moment is probably 50% towards having to have a recession before they'll do anything, which is the hard landing. That hard landing is the best for gold because you've got a lot of policy confusion. What happens there? And they always do it. They have every opportunity on the way in and the way out to do it 25 bips. Keep control of the market. And no, they leave it so late that they have to do 50s and 75s. And that's probably what we're going to end up with here is data will deteriorate so quickly, so badly that they'll have to do an immediate 50. And by that point, it's then going to be tough for the market to decide whether that's behind the curve and deserves the consolidation. And that probably lines up with a deep wave 4 I've got in a lot of the indices set up for the end of Q3, Q4. So that probably starts becoming our base case as well, that they're starting to get behind the curve. So it's all about politics then, and as who's on there, Fato, a horrible debate indeed last night. Democrats must be scrambling. So I saw a chart this morning that saw the Democrat odds plunge by about a couple of points, but Biden to be the next president dropped by about 10 points. So he is, it just sound like there's a lot of inner circle scrambling around to go, it's time to probably twist and bring someone else in. Yeah, and Trump certainly seems to have him totally ruffled. It would be a surprise to see Biden last out the election campaign unless something miraculous happens. And yes, 67% in the poll afterwards thought that Trump won that by a mile. And it was, even though it's been edited badly for most of the media, it did look that way. And I mentioned this morning Euro fudge. So just as the Euro pattern, which we'll look at, looks like it's very close to bottoming, and that may well be on. We've got the first result in France on Sunday night. That's when everyone then decides to do other things. Subject to how that comes out, you may see it appear that there's the likelihood of a coalition, a left coalition, perhaps. But all up in the air. It's overdue a little bit of a relief rally into the euro, and that may well be what makes it happen. It'd be dependent on the first round vote for the national rally not being scarily high. Within that, though, as I said, we've had this 2-day conference in Euroland, super Euro fudge as usual. And not only do you get beaten up in your parliamentary elections, forces Macron to do something stupid, but you get the chance to at least go through the motions and accept what happened in that vote. But no, they've huddled together, found 3 centrist, leftist, liberal parties representing about 55% of the votes. And then the third biggest bloc in the whole European region was the right-leaning parties, Italy and the rest. And they didn't get to even be involved in the vote for who the new leaders were going to be. So Maloney and Orban are absolutely furious. And the irony being that as of Monday, Orban takes over the presidency for 6 months. So I'm sure that's going to be quite antagonistic. There is a vote in July to see whether Ursula and the other two, I can't remember the names, get in. Now, she only just scraped through last time, so this will be interesting. There may well be annoyed people within those regions that have voted for those 3 people that say, stuff this, I'm voting for who I want to. And that could cause a vote down of those people. So that'll be another reason for a bit of a Euro panic, perhaps. It looks like we're due a rally, and then that could well be a reason to make that happen. And we've obviously got to get through the final French election in the middle of all that as well. So don't expect the rally to be the end of it in the short term. I think we've still got some volatility. That's probably consolidating the first breakout. And then we'll have a look where we are. We'll look at that in a minute. So obviously next week, it's the big one. It's the anointing of Nigel Farage. No, not a chance. I mean, the media is getting massively against him again. They're now trying to talk up the Tory chances. There's been this homophobic or racist people in the Clacton area. I don't know the full details, but obviously that isn't going to read well. So that might see the Tories drag around a few more things. It's all about damage limitation for the non-Labour parties now. Just it's not healthy either way to have anyone with too big a majority in this country, because you start getting self-interest votes put through. But we shall see. And then we've talked about how the yen looks to be on a one-way ticket to ride. There'll be a number of meetings called UAIDA. We'll probably have to go and see the Prime Minister again, because it's starting to get a little bit serious. At what point do they actually decide to spend the money in the right way? I mentioned Nike in today's meme mainly because you're always going to get some people go, "Oh, it's the biggest sports retailer, blah blah," and they're down 15% on the day. That's not because of lack of demand in the economy. That's lack of demand for their products, which they've messed up. Rather than go with a lot of wholesaler retailers, they do go with JD Sports. That's the biggest contract for JD Sports, and they made them their online retailer as well. There was a thing with Amazon a few years ago, but mainly they haven't gone with Foot Locker and people like that. So not only is their stock not really changing, and they've had problems with Converse, but they've created the self-harm. So they're now throwing money left, right, and centre at the Euro 24. They've got most of the tops there, and they're going to be marketing like crazy in the Paris Olympics, which is why I said they're starting a lap behind. But that is not an economic crash yet. It's not. I don't think that's a canary in the mine. That is just self-harm. Look out for other sectors. So, are there any other questions that anybody wants to talk about for anything that's happened this week? So, Atlanta GDP now drifted back on the durable goods yesterday. So, Q2 growth over there is down to 2.7 now. We've got Michigan coming up, haven't we? The inflation expectations and sentiment. The sentiment keeps dropping because we're not getting the rate cuts. The inflation expectations you'd hope would start to dissipate with the data that's coming out, but I think everyone's just fed up thinking that the rates aren't moving. So we're not really getting good read-throughs from respondents there. Talking heads, the US, pretty boring. You'll see them in the weekend one. Um, Aussie is one to watch out for because they're determined to not have to put rates up, even though they're trying to talk the story. But they've now missed on the CPI during the week up to 4%, and the MI, market intelligence, inflation read missed as well yesterday. So I think they're having to do a lot of talking, and they're already saying that what's happening in Australia because the rates are staying longer for higher. People are having to sell their houses to pay off the loans because things are getting too stressful. So that's a factor to watch out for. Something that may start happening in the US a little bit. The housing index is just holding on, but the construction side of things, as we talked about, is still falling apart. You may see some more stress there, but the mortgage market in the States is a lot more mature. People are on lower rates for longer. So it's kind of half the economy is offset by good rates, and it's the ones that are subject to short-term rates that are in trouble. I mentioned what Barkin said today. That was annoying. Tokyo CPI came in all right. Yeah, so I mean, obviously, Micron came out this week, and that just showed you how sensitive the market is to earnings now that we're so elevated. What has been good for the tech stocks is that the earnings have been beating and they've been raising guidance. Micron was an interesting one because they did actually beat the midpoint on most of their metrics, but there wasn't any upgrade for the rest of the year. And they've actually said they're going to spend. There was an upgrade to spending to capex, which means having to run quicker to keep up with everyone else. It's kind of a good thing as long as their goods are still demanded. They do have this high bandwidth memory chips that are useful in the NVIDIA chain, but it isn't. They've not got a monopolistic position there. They're not on their own, so they're having to spend and spend. So yes, it will be interesting, and that might be why. And we've said that June to August is going to be net positive for the seasonality. Within that, we've got to get through Q2 earnings season, and it may well be that we just see a slight slowing of guidance, perhaps from one or two of the heavyweights, which may just cause us to put in one of those decent wave 4 pullbacks, but we'll see how that develops as we go along. Alain Jean Renaud, do you think French and UK elections will have a positive impact for dollar, or most will be decided on the non-farm payrolls? Obviously, it's going to be sequential getting towards those. Safe haven flows to the dollar, perhaps, if things go messy over the weekend. To be honest, as I said, I'm sort of leaning towards a little bit of short-term relief for the euro and potential dollar just starting again to top out. UK, again, that looks like a cakewalk, but for Labour and the markets are adjusted for that. I think sterling would paradoxically react well to the margin of victory narrowing, because I think people would be just a little bit feeling a little bit safer that anything radical will be able to have the chance of being voted down. Um, like I said, it can often be dangerous having too big a majority in these things for markets, and then that way you can keep a degree of certainty onto uh, forecasting. Plato is certainly someone with a legendary track record. El Ariane and Bill What's His Face at Gimco, they were legendary and were quite all over it in the GFC. And El Ariane left. He's become a bit of a talking head since, but he's very sensible. But he's from the bond side of things, so you tend to get things properly analysed without all the fluff that you can often get from the equity strategy side of things. when you're analyzing bonds, then your first claim on a company, then you will know things definitely inside out as to whether you're getting your money back or not. Whereas often analyzing from an equity perspective, you'll allow a little bit of license and hope for the outsized gains. So not really. Um, Hello, Mark, Adrian. Do you have any questions? Is there anything else? Should we? I'm very happy to just start looking at the charts if you want to see what needs updating. Are you all playing today, or are you sat on the sidelines? Have you been waiting for PCE? Does that change your outlook? End of quarter. I've only been with you for a couple of quarters, but is that something that you've found difficult before? You get some odd moves, don't you? Somebody was saying on our chat is asking about futures and CFD charts. But yes, increasingly with us now starting Alpha Futures, we'll start looking at some future prices. Often from a charting perspective, it can make things slightly difficult if you're looking at a continuous chart because you get the jumps into the next series as you get deeper into it, particularly on the quarterly end, and that puts in a big, obviously, carry price into it, and often you may get a completely different chart ending than you were gonna get just staying on the CFD or the spot chart. Obviously, it's good to look at both, and you get some real proper volume action on the future side of things, as you get to see where all the hedging flows come in, blah, 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 and that often happens from hedging out derivative positions and the old gamma in the market. So you'll start to see signals of where the real levels can be on the indices and on some of the uh, currency pairs. But we'll go more into that when we start looking at the futures with Ben in a few weeks' time. Pav slept through Thursday and Friday. Yeah, you've probably saved yourself a bit of money. There's been a lot of reversion catching people out. So my dollar, I don't think anything's particularly changed in that um, for the minute. Boom, boom, boom. I still think we're grinding into this 106 spot 2, spot 4 kind of region to finish as the end of a C wave, 5 waves. We're in very much deep into the lower degree fives there. It's almost a fifth of a fifth. Here, we've done enough to have a consolidation to finish that fourth sub-micro wave. But it could equally be doing a double, which is why I've put in a 4 with a question mark. We're either working our way up inside this fifth or we're about to start it. It'd be nice and clean to have a double there, so 3 down, 3 up, small degree 5 in there. And then that means at some point we've got a little bit of dollar strength to come in. That may happen just from flows today. It very easily could have some volatility. It's not gonna be because the data has been in line to slightly dovish. You may get a stupid comment from one of the talking heads. As I said, their language is beginning to lean again towards talking rates up, which is an even bigger mistake, I think. So just watch out for any loose comments this afternoon or early evening, which might just finish that pattern off. And then um, again, that might be the end of the euro sell-off setup going into the weekend for a bounce. So Pav, yeah, Sep, November, April, May. Totally agree. It's what we talked about the other day. We just keep doing this whole nesting situation. And See if I can go out. So this is all part of what should be a three wave. So you got like an A wave down here. We've been putting in, um, we put in, I think is a B there, and then ever since then we've just been having one twos, one twos, one twos until it finally, hopefully breaks. We should at some point have a hit down here to a new low, which would go sub 100. What from there? Yeah, the reason why I've yeah, the reason why I've moved across there is because we're kind of that's overthrown. I just want to make sure that we're not missing out on this being. This could easily be the reason why some people are bullish is that this could end up being a double extension. So we might put an equal legs of that into up here. Would still be valid versus the original sell-off. That is the outside thing. The outside area, there might be something that causes a dollar breakout. At the moment, it's all been. Uh, but yeah, I mean, ordinarily when you first start drawing it, you would go through A and B on the thing. I just tried to keep that relevant to there just to see how it's happening. So what do you think's happening? Because obviously that can read as an overthrow to the channel, and again, it'd be super bearish if we come back into it, which hopefully is what we're gonna get. Which gets us back to that sort of 103 level if it'll come. Again, it's really been bouncing off that, hasn't it, on a daily basis. Oh, thanks, Julie. Wondered where she was. Gone to count the gold. So yeah, so this once this falls, we said it back here, this 104 level became very important. Thought we'd broken it, and then we had a reversal and a double extension. So yeah, I agree. Once this whole nesting thing corrects itself, finishes itself off, there should be a surge down, which takes us across to gold. Obviously, that will help gold for its fifth leg up, hopefully when it comes. So currently, I mean, the danger with this is we are talking earlier. Um, we've got the A wave and a B wave, and we're now working our way down in a C wave, which should be five legs, but this has gone into the realms of wave one. So we've had three waves down. You'd have to consider that being a W now, and then we're putting in a connector, which again should be three waves. And the fact you've had one, two, three there, one, two, three down there. So we've now got another leg up, which should be a five wave to start with, to be an X, and then that will sell off. So here we're looking at how deep that retracement would be. Someone asked, is 2350 an area? Then it potentially is. I wouldn't really want it to go much higher than that because that's big for an X wave. You're starting to look at something else. Spot 618 is normally where the thing reverses, which just happens to be where we've just started reversing from, which is ironic. PCE is coming okay. It's just it's a non-negative, but it doesn't mean that gold has to go high. So we're still, as we said, we're still the A pattern is for this to come down to 2250. No one wants it up more than me. I'm long up here. I'm long gold stocks, but I'm not fighting what the pattern is. Been saying it for months, or for weeks now, isn't it? Not months. This is winding down. We're still in the most valid structure is that we're still going to go down to 2250, and it will be another three wave down. We don't know what that's going to be like, and then the final wave will be, or should be, five waves within that. So there's every reason why we could be done here. It's quite a shallow finishing leg, but it doesn't have to be. We'll have a look. Let's have a look at what that looks like relative to each other. So again, it's just shy of the third, the C leg being spot 618 of the first leg. That's almost a confluence around here. The 23, 40, 42 level was always going to be an interesting point to get through. See how that develops. I mean, again, we've got the similar setup there. That the equal legs for that just north of the 78 spot six. You don't really want to see it go up there because that just complicates it in the near term. Yeah, I mean, I do think this rolls over to put in the final puke. I don't, unfortunately, I was told I was looking at the data on from what you can find these days that they allow you to see. So much of the open interest has rolled over to August in gold futures that it feels to me like there's been some kind of fudge done. There must have been a leasing agreement somewhere between the commercial banks that have filled in whatever the supply is for now. But by definition, that's only a lease. That isn't anything being sold. Whoever's done that leasing has got to find that gold at some point. Eventually, when these things unwind, there has to be an unwinding, and it's just when somebody breaks in the chain. So it has to feel like we're not going to get the super squeeze breakout today. We're running out of time for that. And it very much looks like, as I showed, the market is still in distress for gold. The 6-month forward rates, leasing rates are massively below the 12-month. And when that's a negative relationship, that shows you that there's an issue in finding supply of gold. So it's not gone away. It's just a case of where it manifests. So we need to be aware of it. Don't be long, Pav. Don't be long. Any other questions on the gold setup? What people thinking out there? We have a lot of people who look at it and be interested. The other issue that could happen is we may put in this 2250 low, and then we've got in what will be a big WXY type sell-off. That can have a deep bounce back before we put in another correction of a similar shape, which again could bring in a much deeper sell-off, subject to how high the bounce is. We've got to keep that in the back of our minds. As we talked about, the slight chance that seasonality might be around, but I do think this market has changed for good, and that the physical element will keep the thing buoyant. Plus the fact, as we go through Q3, we're getting very close to October. I'm of the opinion that BRICS are going to announce something in September ahead of their conference, and ahead of and right in the middle of the US election campaign, et cetera, et cetera. So I do look out for that fifth wave really taking hold as we progress through Q3. So we should bottom out fairly soon. our friends, VIX and Move. Now VIX is starting to get down to those extreme levels. It's kind of on the edge of greed. I don't think, as I said before, I don't think we're into super greed until we hit below 11 and 10. But obviously, it's getting quite extended on what, in general, has been uh, negative breadth, as they describe it. But we were expecting to see a little bit of sideways action with the tech stocks as the rotations went on. One thing that has been happening, and probably reason why the US is holding up a little bit, is that there have been big institutional sellers of Europe because of what's happened in France. So where that was happening in reverse and really supporting and pushing on DAX, etc., it's caused a bit of a spanner in the works, as it were. Oil, I mentioned during the week. I haven't updated that chart. I'll do that on Monday. Um, but the background with oil, again, there's real confusion that there'd been a big drawdown last week in the middle of the holiday week, but a lot of the data was nonsense. I think API had seen an inventory build, so this week they both saw inventory builds. It's not um, it's not looking nobody positive there, and I do think that OPEC have completely handed the dominance over to the Americans. The Americans are going to keep pumping as much as they can into the election just to try and help on the inflation side of things. How long do you leave it without, if the oil price starts fading before you're losing out on price and on lower volumes? They haven't got a history of standing together for too long. You'd expect them to come steaming back in and add to the supply, and then we should get that proper sell off in oil at that point. So it looks like gold is really trying to react off that 61.8 fib. Um, I'm here, and I'll always try and help you, and I think people understand that. You can ask me most questions, but I'm not a support guy, so um, I do keep getting these things, and I just have to tell you to get to support tickets or the public chat, and I'll help if I think there's a serious issue that I can help the mods with. But in general, I'm here for market analysis, etc. Um, let's just have a look at that chart on the way through, which is S&P equal weight. So as we were saying, despite the fact that the tech has been selling off, it hasn't broken the equal weight to new lows. And in fact, over this week, it's been digging in, hasn't it, the last 2 weeks, which shows you that you've been having a bit of rotation, and it couldn't hold on when you had a lot of the tech selling off. We'll see how we react from there. But in general, yeah, we'll see how that looks with the S&P overall. We could be nesting, but that has more of a feel of a connector in the middle of that. So we might come and challenge that low here. But again, that could happen while the tech stocks are going the other way. If you get the risk on again, the equal weight can actually be inverse to what's going on in the bigger side of things. FTSE daily, we thought we'd put in the WXY. We haven't taken out the low of that yet, so it feels until that goes, we are working our way up this fifth wave to here when we get what should be sometime in July, the next little spurt for a lot of these indices for me is the top of one of my higher degree third waves, and then we'll have a pullback before we move up again into August. July, as I said on the overview for today, it's gonna be very I'm looking forward to July, but it's going to be very political, which will cause a few bits of angst, and we've not had any geopolitics for a while. It's quite strange. I've heard the Americans have been moving troops towards the Middle East to supposedly prevent anything happening, but it's like when they're around, it's things get escalated. So yeah, FTSE on the hourly basis, we are holding on at the minute. We bounced off the sort of 61.8 fib there. Have we done enough? There is an effective 5 waves in there, so that does look like as long as that level holds, we should be moving up into the 3rd wave early next week. Well, the Nikkei just keeps perplexing, doesn't it? I showed during the week. Oh, you haven't seen it. Um, it's in the weekly. The outflows, inflows for Japan have definitely been doing some overseas investment, but it hasn't hurt the Nikkei particularly. And the declining yen maybe probably the reason why the yen is not bouncing as much as you think is that if anyone still believes in the Japanese stock story, they'll be hedging out their exposure because you don't want to be losing on the currency. So that will, by definition, see selling at the same time as investments. That kind of makes sense in a way. But that's played out beautifully. Still want to see one more high on that for this black 3rd wave, but you've had a real beautiful extending 3rd wave in here. Really holding on to the 50-day moving average. Consolidated. So a couple more moves up along with the other indices, I think. Well, I hope anyone did play it when we were trying to buy it down here. Superb. Again, that is what we talked about last week, a 1, 2, 1, 2, 1, 2, 3 degrees of nesting, and that when it breaks out, and you're breaking out in terms of 3rd wave. So this is the blue 3. When that finishes, that's the black 3, and then a 4, 5 will put in the red 3. So it means that you've got still a lot more upside to come in the Nikkei by the look of it. Very powerful stock market at the moment. Mm, 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 mm. So when we look at the Dow on Monday, uh, we're talking about we thought we'd put a wave 1 in. It went up a tiny little bit more, so move that. Have we then put a consolidation in? Looks like we had an ABC and ABC 5 little teeny waves. And then at the moment, we're doing a kind of what looks like a potential leading diagonal subwave 1 as part of 3 here. That means there's a lot more to come from that. The Dow's been awkward. It's not got the tech issues, has it, particularly? So we'd have the 2 down here. So very short term, there's possibly one more little pullback in the Dow before we move ahead again. It looks very much set up for continued breakout along with the other indices. There's not really anything in the way at the moment unless we get some crazy talking heads. Similar thing happening in this one, oops, which is the Nasdaq. Nasdaq's been playing out okay. We talked about there's half a chance of that maybe doing a double coming down here, but on Monday we said we'd hoped towards Thursday, Friday we'd be moving into a breakout, and this is a sort of valid two wave here. Um, just about. It's a bit of truncation there. May well be that we just finished here and this is all part of the early thing. Either way, I think you've got stop losses with 100 points to play with there. To still play this on the upside, I still think before this move's finished, we're coming up to the top of this trend channel a couple of times. So potentially early flows for July into indices next week are gonna shove all these things up to their wave 3 targets, and then we might get a little pause and then go again, and then we're deep, then we start to go into earnings season, and we'll see how that reacts. Excuse me, that was just another deeper look at that one. I'd been labeling that up. That does look like we've had a leading diagonal for minute wave 1 of 5 with this red wave. So again, it'd be nice to see us put that in today if we could. Let's hopefully get the Nasdaq at just having a teeny end of quarter spat and then push on at the start of next week really. But this could all happen within the time frame of today. Today has all the potential of being volatile, but I'm looking for 5 subwaves up. We've looked like we've done 1 and we're playing out 2. It doesn't have to be very deep at all. And then once we get into putting the 5 waves in, minor wave 5, blue intermediate, and then the primary wave 3, measuring that all the way back from wave 2 is what this big green box is. And then the wave 4 would be looking for first a spot 382 pullback, which is here. That lines up with what is the wave 4. We said we'd potentially have that during this week. Didn't quite get over to the other side of the channel, but it's done enough there. Looks like a decent 3 wave there. That lines up with 2 degrees lower of wave 4s. The only other potential within all that is a deeper pullback to wave 4 down here, which would have to be some kind of real crash event. But that is an outside thing because I think we're still playing around with that channel. I think these 2 degrees of wave 4 are a target, which would bring us back down to 19,000. I think eventually when we get up to the 5th wave of these primaries, that's when we're gonna get a potential market crash event or what will be seen to be a proper deep pullback. But even this, by definition, when we get there, is a potential 5 to 10% correction, even as part of what we still think is a bullish trend channel. Our old friends, the Germans, are having to go sideways with the French debacle. As I said, they've had a great setup. We've still not taken out the low of, what day was it? The 14th of June. That is holding on. We have gone into deep extension though, mainly caused by all the French market causing some outflows, as we said. The big institutional banks are seeing massive outflows from European equities, getting caught up in it, which is a shame. Eventually, I still think they're going to have a 5th wave breakout when this finishes. So this may all actually be redrawn as a wider wave four, just because the nature of it. We haven't. I mean, you do get near 100% retraces sometimes for wave twos. It all depends on this low here holding, or we may if we put in a new low for that, then we've done a double extension of some sort. We talked in the early part of the chat all about the UJ and what we thought was happening. We were chatting around here on Monday about whether this was the third wave or the fifth wave of this blue intermediate third wave. We said just to make sure we'd like to see the whole move of this wave three to be bigger than the wave one, just to give us options to make sure that this is a valid structure and that has carried on being. We have put in what looks like the top of this third wave now. We'll move the 5 up to there. So from that 3, we had a pullback, and then we've had a 1, 2, 3, 4, a 5-wave move to the top that we've sold off from today. I said there's gonna be lots of chatter. We're looking for an ultimate breakout to the top of the channel, 166, 167. There's people talking about 170. We mentioned earlier, Goldman's and Bank of America talking about 165, 167. So here, flip-flopping around this 160 supposed line in the sand, supposed big options area. I think we've got one more flip-flop around that. So from here, I'm looking for at least a pullback to um, that sort of 158 region. That again will put us in line with 2 lower degree fourth waves, and then from either 158 or this 160 area, somewhere within the realms of the minor wave 4, which is either side of 160. You would expect another breakout. That's when the market is probably gonna test them. They're not really gonna intervene until 164, 65, and the market will test them. We might get a blowout up to 170, but this is very much like the 152 when we said if it breaks, even though it might flip-flop around it, unless they do something substantial, not just chatter, not just yen intervention, throwing money away, until they do something firm with rates or the US changes pattern, and at the moment, the talking heads are not helping, then UJ is a kind of underpinned one-way bet, isn't it? And I mentioned earlier, this may have started today just because they try and go on the back of weak data points. The PCE was weak enough. The dollar is, as we said, selling off. So yeah, anyone got any views on UJ out there? I know Gemma plays it on our chat. She does quite well. But yeah, that has worked out really nicely even from the longer view when we'd said this looks like it waves. Originally, we were hoping that it was gonna be an overthrow, expanded flat, and then we we had the setup for a number of weeks that this high at the top of the channel would have to be taken out to see, and if it was, we'd then see lots of further upside, and then we had the similar situation here that this one had to be taken out, otherwise we might be in a start of a sell-off pattern, but subsequently we've gone to higher highs on both of them, which very much suggests from primary charting that the higher highs suggest that we're going higher eventually. So any other comments on UJ? Anyone disagree with that? You're not very chatty today, everybody. What's up? Cool. Thank you, Julie. So we had a quick look at the going into the French elections on Monday, if we're gonna see relief on the euro, we probably need to see some relief on the bond side of things. At the moment, that is still, that's on the monthly. It's ticked off slightly, isn't it? Let's look at this on the daily. So we were on the back of last week and the following week. We said this area here was trading at decade highs. We had some form of relief, and now we've pushed on to even higher highs. Intraday, we are pulling back from the extremes, but those French bonds are still suffering at the hands of the German ones. Perhaps that's more people just flight to safety while they get through the whole thing. And as I said today, the backdrop to the European elections hasn't necessarily helped things either. So the problem we've got is the outcome for for the euro is very French dependent, with them being one of the two main drivers of it. And if they're not going to be in control of their own policy, being euro positive, then there are potential worries for bonds and for the euro. But I'm expecting to see some form of fudge over the weekend that's interpreted as being euro positive in the short term until we get the actual election result next weekend, following weekend. Julie stayed up too late. It's all at ABC, shiny jackets. And again, I've been very busy again. I keep moaning about it. I shouldn't do because it's good. Um, I haven't managed to get on top of my sterling situation, but it does look like we are playing out what we discussed on Monday. Was that with you, Pav? Where we're still looking for this potential. We have had a lower low since Wednesday. That still brings us into looking for equal legs maybe, or a deep retracement, wasn't it? Equal legs of the 2, which is from there. This has still got potential of dropping down to 125.34. And this is going through into the election period next week, so there may be something that's suggesting we may have some kind of sterling wobbles for certain reasons, dollar strength early next week, although we're looking for indices breakout. Well, still, it's potential. It's all that working our way through that dollar topping out. So we've probably still in that fourth wave we talked about on the dollar. One more breakout to finish off the weak euro, the weak sterling, and then start looking for the bounce. What's the dollar doing? I just see the Chicago PMIs have beaten, haven't they? Mm. So that's quite out of line with a lot of the others. The Chicago PMI being quite strong. Most of them, the sub ones, have been small beats. That's quite a jump. That's probably who does that one. So that's ISM Chicago. So we'll keep an eye on that because remember we've not been having the follow through from ISMs from the purchasing managers, the market ones that we had last week are all strong. That's an interesting print there because it's an ISM print. I'll dive into that over the weekend and come back. That could be quite interesting. Michigan coming up in a minute or so. Oops. think it's time for a haircut as well, don't you? It's the mad hair day. So what I was saying on the euro, we've had, um, we're into this 5 waves down for a 5th wave to bottom out this minute 2 wave down here. And, a minuet 2 wave, but we need to have a lower low just to finish the pattern off. So a little bit of dollar strength might be all we need there, and then we get the hopefully a little bit of weekend euro early next week breakout. But this is looking like very much like an overlapping ending diagonal 5, and we should get one more low. So that ISM print may well be the thing that does that. Kjin, we just did GBUSD, but I'll just quickly go over it again. Uh, we've had a 1 wave breakout. We're in a consolidation, 2 wave, which should be a 3 wave pattern, which we think we've put in an A leg there, a B leg, and now we're working our way down, aiming for this equal legs of 125.34. So every chance that that plays out to some degree. Spot 786 to 1. So we're looking for potential very short term next week dollar strength and euro and sterling weakness that then reverses. The euro may play a part in that by itself. So where was Pav? Keep losing where I've put that one. Let's just move that in. Yeah, we're just on the thanks, Pav. On the euro US dollar, once we've bottomed, it's going to be a wave 3, which will be relatively powerful. So we can easily get into that uh, zone you're talking about. But I'm expecting it to go a little bit higher than that before it retraces. But I'll look into that. Because it may be we get that with one of the subwaves of the breakout. Ultimately, we need to get back to a new high, don't we? Of nearly, we need to break up to 109 really for the pattern to stay in place. But it may well be that the duration is longer. Probably need to move over here, don't we? That could end up being a bit deeper. So subject to what happens in the election next weekend, that could well be a very odd outcome that ends up being retracement time. But that's all for next week. Either way, for it to be valid, we need to break this low. 106, 1.06650 sort of region. So where would the invalidation be there? 2, 3, So unfortunately, we're a little bit mid-range. I mean, the stop loss is out right over here, 107.60. If you want to try and eke out that last little bit, but to be honest, I'm looking to try and buy this as it comes off. If any short-term bounce here could still be part of this being an unfinished wave 4 before it goes down again. Boom, boom, boom. Yeah, let's just look to try and buy this at an actual low and play that upside. We're being clever. The underlying is a bullish setup, so we don't really wanna take that on unless we're at an extreme. So nearly done here. It's 3 o'clock now, isn't it? What's happened on Michigan? So that's so a bounce back small in sentiment, but these are still numbers that are multi-decade lows. Um, so not really sure why people have suddenly got slightly less negative than last week. Um, their inflation expectations have come down a bit, so maybe they feel that the looking at all the data, like a rational non-Fed person, you're starting to think that you're closer to should be closer to rates changing than what they're saying. Certainly, so maybe that's where the tick up is coming. Again, that should start the old flip-flop for the afternoon with another slightly dovish piece of data. Not massive at the margin, but it's good to see that the people doing the survey on Michigan, which is that a prelim or not? Yeah, that's an actual second look at June data because it's the last week of June, isn't it? So I was I was surprised on the 14th print, but that only took them up to data on the 12th, which missed it missed out the really negative PPI data, et cetera, et cetera. So having seen some more softer data, people have changed their inflation expectations, blah, blah, blah. So yeah, that now makes a little bit more sense over the whole month of June for those figures. And I think that's it, isn't it? I think we've gone through most things I want to look at. Any other questions? Excuse me. I've got a quieter weekend this week. Is there anything that anybody wants me to really look at for next week? Start of Q3. You're only doing Forex, Pav, no problem. Thank you, Julie. You too. Have a good weekend. Anybody got anything? Any macro stuff? Any fundamentals? Any market stuff? Kavana. We can have a look at that if you want. Yeah. CVNA. Yeah, brilliant. I will look at that. That'll be interesting for me. So I've been, as I said, working on that. Hopefully, it might be a similar stock. I might even be able to talk about that one as well. That'd be good. What, BlackRock? You want to look at? Oh, okay. Right. Yeah, they're becoming known as an agent of the Fed and other things at the moment. They're getting far too powerful. Anyone else got anything? If not, I'll let you all go. Well, yeah, they do own most of the S&P, but I'm just mean in terms of how they act with the marketplace. They are a little bit too dominant. It's a good. Hopefully, you've had good weeks. It's been a bit tricky, hasn't it? England have gone out of the cricket nightmare. We've got to sit through England at the football on Sunday. That could spoil a good weekend. Okay, Euro, Aussie dollar. That's on the list for Monday. Thank you very much. Right, good stuff. Thank you, everybody. Look forward to seeing you all on Monday. Let's hope it's a good weekend. Take care.